What is a 1099-K? A 1099-K is a tax form used to report payment transactions processed by third-party platforms like PayPal, Venmo, eBay, etc. It shows how much money you received through these platforms. Essentially, it helps the IRS track income that might otherwise go unreported. Now, in the past, you only got a 1099-K if you had over $20,000 in transactions and more than 200 payments in a year. But now, the 1099-K reporting threshold for 2024 will be over $5,000 in payments. In 2025, the threshold will drop to over $2,500 in payments. Starting in 2026, the threshold will only be $600. Why did I receive a 1099-K? You received a 1099-K because you met the IRS reporting threshold. That means in 2024, you received $5,000 in payments through a third-party payment processor. Now, just because you received a 1099-K doesn't always mean you owe taxes on it, but the IRS gets a copy, so you need to make sure your tax return explains the income correctly. Otherwise, they might think you're hiding taxable income. What if there's an error on my 1099-K, or you shouldn't have gotten one? Sometimes the 1099-K includes personal transactions that shouldn't be taxable. For example, your friend reimbursed you for dinner or rent through Venmo. You sold a personal item for less than you paid for it, like an old couch or a used laptop. You received money as a gift from family or friends. If you see an error on your 1099-K, you should contact the payment platform that issued it, like PayPal, Venmo, etc., and you can request a corrected form with them. If they don't correct it, you need to explain the mistake on your tax return. Is my 1099-K taxable income? Not every 1099-K is taxable. Here is a simple way to figure it out. Yes, it is taxable if you sold items for profit, like flipping items or reselling goods. You worked as a freelance worker or gig worker, such as Uber, DoorDash, Etsy, etc. You rented out property with Airbnb or Vrbo. No, it's not taxable if it's a reimbursement for shared expenses, like a Venmo from friends. You sold a personal item at a loss, an old TV, bicycle, what have you. It was a gift from a friend or family, so not payment for services. How do you report your 1099-K on your tax return? Now let's go over how to correctly report your 1099-K based on what the payments were for. Let's say you sold a personal item at a loss or a gain. If you sold a personal item for a loss, you don't owe taxes, but you should report it to show the IRS. Report the sale on a Form 8949 in Schedule D to document the loss. If you made a profit, that part is taxable as capital gain. Let's say you have shared expenses from Venmo, PayPal, Cash App payments. If your 1099-K includes money from friends paying you back, you need to show the IRS it's not taxable. Report it as a non-taxable reimbursement on Schedule 1, Line 8Z with a note explaining it. Let's say you're a gig worker or a freelancer. You work for Uber, DoorDash, Etsy, etc. If you're a gig worker or freelancer, your 1099-K income goes on a Schedule C as self-employment income. You can deduct expenses like mileage, supplies, or fees, and you can use the Schedule SE to calculate and pay self-employment taxes. Lastly, let's say you rented out property, like Airbnb or Vrbo. If you rented out a house or a room, there are many factors that determine whether or not to report it on a Schedule C or a Schedule E, such as you providing substantial services and the average guest stay at the property. You must research and identify if your property qualifies as a rental property and how you should report the income on your tax return. After this, you can deduct expenses like utilities, cleaning fees, and repairs. So if you got a 1099-K, don't panic. Make sure you report the income on your tax return. You need to figure out what the payments were for and identify what is taxable and make sure you deduct any eligible expenses.